Welcome to Daily Tax Minute. This is Tony Novak here to share a few points on saving taxes and staying out of tax trouble. Today's topic is over-reporting income. Now, normally when we're talking about tax issues, we're talking about under-reporting income. We forgot to report that extra side job or an extra money that came from a side gig, or we run a business and didn't add up all the cash and bank and credit card receipts correctly. That's the norm. Sometimes, however, there's a case where income is over-reported, and this episode, like many others, is based on a case I was working on today. I'll explain in a minute. So, how does that happen? How does it happen that a taxpayer reports too much income? One case is that it's deliberate. If your income, self-employed income in particular, is smaller than would qualify you for a maximum benefit, like a child tax credit or an earned income credit, you can actually get more money back by saying that you made more, even if it's not true. So IRS, of course, is very well aware of that, and there are stringent requirements for a tax preparer who prepares one of these returns. It can be not only just obviously a problem and a penalty, but it can actually be criminal to do this on any large scale, overstating income. The more common scenario, and what I ran into today, is that a business overstates its income because, frankly, a business owner, the person signing the tax return, may not be aware of every transaction or might not be an expert bookkeeper, and might have just lifted a report off of QuickBooks and handed it to the tax preparer without even looking at it. And I suspect in the case I worked on today that all of those was true. There just wasn't any oversight or common sense applied. Now, the one advantage, presumably, of working with the CPA is we are supposed to be good at asking questions and being skeptical and saying, hey, this doesn't make sense. That was the case with this business. Over a 4-year period, the tax return showed $400,000 more than this guy actually made. And I got to know him a little bit. I said, if he was making an extra $100,000 a year, he would have an entirely different lifestyle than what I'm actually observing. It didn't make sense to me. And so I started asking questions. And last night when we sort of broke it, he said, that's why I like working with you. You ask all the right questions. So we got to the bottom of it. And of course, I have to do more digging and more due diligence, more verification before I just make a blanket statement like that. Say, hey, we overstated our income and tax liability. Give us money back or reduce our tax bill. I have to be pretty darn sure and have pretty good documentation. So we will be going over the bank statements and the 1099s. We've already done that, matched up the 1099s with the tax return and looked at the difference. And then we'll bring in the bank statements as a third data set to get to the bottom and have credibility to the numbers we actually use as the real income amounts and not the overstated amounts. So I'd like to hear if you've ever had this happen or ever heard of it. It's pretty rare, I think. But if so, send me a message through social media, or if you want to talk one-on-one, I'm happy to do that. I'm easy to reach at taxproblems.cpa. It'll let you schedule a call or an appointment. It's Friday evening. Have a good weekend. I will be back tomorrow with another Tax Minute.